Hold everything. Did the impossible just happen? In a geopolitical earthquake that shook the very foundations of global finance, President Donald Trump has just announced a breathtaking, game-changing trade agreement with China. Billions are on the move, markets are exploding, and the world is asking, is this the end of economic war, or the terrifying dawn of a new, unpredictable era? This isn't just news, it's a financial lightning bolt that promises to redefine every major industry, every investment, and potentially, your own future. From the shadowy world of rare earth minerals to the soaring heights of the stock market, prepare to witness the untold story behind the deal no one saw coming. The echoes of a bruising trade war, characterized by tit-for-tat tariffs and escalating rhetoric, are still fresh in global memory. For years, the world's two largest economies have been locked in a high-stakes standoff, impacting everything from manufacturing supply chains to consumer prices. The initial phase of this monumental agreement was tentatively reached in Geneva back in May, laying the groundwork for a temporary reprieve on massive tariff hikes. This was a crucial timeout that prevented an even deeper economic freeze. Subsequent talks in London aimed to solidify this framework, and now, what was once a glimmer of hope has been confirmed as a signed reality. The core of this breakthrough lies in several critical concessions and agreements. On one side, China has committed to expediting export licenses for rare earth minerals. For those unfamiliar, rare earths are not just any commodity. They are the lifeblood of modern technology, essential for everything from electric vehicles and smartphones to advanced defense systems and crucial microchips. China currently dominates the global production and processing of these indispensable elements, and Beijing's earlier restrictions on their export had become a major point of contention and a significant threat to global supply chains. The resumption of their smooth flow to the U.S. is a massive win for American industries. In reciprocity, the United States has agreed to lift a series of its own, restrictive measures, on China. While the precise details of all these measures are still emerging, initial reports indicate a rollback of certain tariffs and potentially an easing of restrictions on Chinese tech firms and even some visa revocation policies for Chinese nationals on U.S. college campuses. This reciprocal lifting of barriers signifies a concerted effort from both sides to de-escalate tensions and foster a more open trading environment. It's a testament to the idea that despite fierce competition, cooperation remains paramount for global economic stability. The immediate reaction from financial markets has been nothing short of euphoric. Following the announcement, major U.S. stock indices, including the S&P 500, Nasdaq Composite, and Dow Jones Industrial Average, all surged, with the S&P 500 hitting near all-time highs. This remarkable comeback from recent lows signals strong investor confidence in the newfound stability. Technology companies, particularly those reliant on critical components like rare earths such as Nvidia, Apple, and Amazon, recorded significant gains. Retail stocks like Nike also saw positive movements, fueled by the prospect of reduced tariff burdens on consumer goods. Conversely, some rare earth mining companies saw slight share price declines, as the increased supply from China could alter market dynamics. Beyond the U.S., global markets have also responded positively. Asian Pacific indices rallied, with several reaching three-year highs, reflecting widespread optimism about improved U.S. China trade relations. The agreement has been perceived as a vital step towards mitigating global economic uncertainties, especially at a time when many economies are grappling with inflationary pressures and the lingering effects of disrupted supply chains. The sentiment is that a more predictable trade environment between the world's two largest economies benefits everyone. However, the political implications of this deal are far-reaching and complex. For President Trump, this agreement represents a significant foreign policy victory and a fulfillment of a key campaign promise to rebalance trade relationships. It allows him to tout his dealmaker credentials and demonstrate a tangible win for American businesses and consumers. Yet, the path to this agreement was not without its bumps. Earlier this week, there were reports of damning allegations rocking the DOJ involving a Trump ally, and some elevated tariffs, such as those related to fentanyl trade and duties on aluminum and steel, remain in place from prior escalations. This suggests that while a major framework is agreed upon, certain specific disputes continue to be points of negotiation. The Chinese perspective is equally intricate. While Beijing views the lifting of U.S. restrictions as a positive step, China's Commerce Ministry's statement emphasized their commitment to review and approve export applications for controlled items in accordance with the law, without explicitly mentioning rare earths initially. This nuanced language indicates that China intends to maintain a degree of control and leverage over its critical resources, even as it facilitates trade. The agreement reflects a pragmatic approach from both sides, recognizing that a complete economic decoupling is neither feasible nor desirable. Experts are weighing in with a mix of optimism and caution. Many see this as a necessary de-escalation that provides much-needed stability. Howard Lutnick, U.S. Commerce Secretary, confirmed the deal was signed and sealed earlier this week, expressing confidence in its immediate impact. However, some analysts point out that certain non-tariff barriers, like export controls on critical technologies, remain in place, creating a gradual boom in sectors like semiconductors. The World Economic Forum noted that while a framework is agreed, geopolitical risks and inflationary pressures could still threaten gains. It's a testament to agile investing in a volatile landscape. What happens next? The agreement sets the stage for further discussions and potentially more sector-specific deals. While the broad framework is in place, the implementation details will be crucial. There's also the looming July 9th deadline for steeper U.S. duties that could kick in on dozens of economies. It remains to be seen if this deadline will be extended, as suggested by White House Press Secretary Caroline Leavitt. This deal could also pave the way for other trade agreements, with President Trump hinting at a very big trade deal with India possibly being next on the horizon. The global economic chessboard is constantly shifting, and this U.S. China Trade Agreement is a monumental move that will influence countless future decisions. This breakthrough signifies that even in an era of heightened geopolitical competition, economic interdependence still drives nations toward cooperation. The immediate benefits for businesses and consumers are clear, but the long-term impact will depend on sustained commitment and a willingness to navigate complex issues that extend beyond mere tariffs. As this new chapter unfolds, the world will be watching to see if this trade agreement truly ushers in a new era of stability or if it's merely a temporary truce in a prolonged economic rivalry. Please like, subscribe, and turn on notifications to stay updated with the latest breaking stories.